Hey, this is Linda with Hawai'i Life.
Hi everyone, Meena Na. Na. Today's mortgage mana'o is, what is a mortgage pre-qualification?
It's a waste of paper.
That's true. It's not worth the paper it's on. What is the difference between a qualification and a pre-approval?
Okay, so in my terms, the difference between a pre-qualification and a pre-approval is pre-approval actually means something, that the buyer is ready, willing, and able and serious, and you have looked at their preliminary financial information.
Okay, so more technically, pre-qualification is we did an application, maybe I pulled credit, I believe everything that you're telling me, and people lie all the time. I have no idea what your credit score is. I'm going based on fully what the borrowers say that they're making or what their credit score is. So the pre-approval is definitely a lot more comprehensive, right? We've done the application, I've collected your documents, pay stubs, bank statements, I pulled your credit, right? And so I've actually done the analysis and have had all of the tools that I need to make that determination. So if you get a pre-qualification from a lender, just keep in mind that probably means they haven't gone through all the steps or verified all of the things that they need to actually make the determination on if that borrower is approved or not to purchase that property. Yeah?
Yeah, which also means then that sellers' agents are going to, or at least I do, let my sellers know that a pre-approval is much better than a pre-qual.
Yeah, and going to see properties, most listing agents are going to want to see a pre-approval anyway, just with how the market is, to make sure that your buyer is actually serious. So if you're a buyer, get the pre-approval, show them that you're serious. If you're a seller's agent, listing agent, then make sure that you're providing the proper documentation to let them know that you're ready to buy.
Yep.
All right.
For her name
Mortgage term number 342.
Take one.
LE. What is that an acronym for?
LE. Oh.
Ooh.
Oh. I don't know. We're going to learn something. Okay. LE.
An LE is a loan estimate. You've heard of that?
Oh, yes. Okay.
All right. So in my world, LE is very commonly used, so is CD, but LE is a loan estimate. So the loan estimate's just an estimate, but it should give you a pretty good idea of what your closing costs are going to look like.
Oh,
what the terms of the loan will be. 30-year fix, here's your loan amount, here's the purchase price, here's your interest rate, here's what closing costs you can anticipate, whether that be title and escrow fees, insurance, property taxes, any prorations that the seller has already paid for that you're going to have to pay them back for when you take ownership.
Yep.
Yeah, really everything. So the main thing with the LE is keep in mind it's an estimate. So it can change. It will change as we get closer to closing and as fees get tightened up, especially like HOA dues and things like that.
Right.
We can't verify them until we've actually gotten the paperwork from the HOA, right?
All right. Okay. And just to make sure too, this is just pertaining to the loan, not pertaining to escrow closing costs.
It should include escrow closing
Oh,
costs.
never mind. Strike that. I didn't say anything.
Yeah. So, I mean, as part of, if your lender's doing their job, they should be getting a quote from escrow as soon as you open escrow.
Oh, I didn't know that. I learned something again.
So, like, immediately when I get a contract, I will email escrow and say, hey, new escrow, can you please give me your fees? Escrow will do their best to give me as accurate fees as possible. But like I said, things like the HOA dues, they won't be solidified until they actually get the demand back from the HOA, right? But as far as their fees go, those should be fairly accurate. And I should be including those in the loan estimate. Most of the time, your fees are going to be higher on your loan estimate because a lot of people will over-disclose actually on the loan estimate with certain fees, and then it will get pulled back as you get closer to closing. Okay. Because if you under-disclose on an LE, you can't go back and fix it.
Oh, okay.
Okay, so we're in contract. I've opened escrow. I got an LE out to the borrower, and then I'm going to send it to processing.
Okay.
Sounds pretty self-explanatory. What does that actually mean when I say the loan's been sent to processing?
Processing. I would assume, which is a bad idea, that they're going to process it. No, that they go through all the docs and make sure that all the I's are dotted and T's are crossed and look for anything that could be a potential pitfall.
Yes. So just like with real estate, you have a TM. And they're kind of like, they're part of your team, right? And they'll make sure that they go through the contract, they're not missing anything. That's what a processor does. So I do my best as a loan officer to pre-underwrite a file, collect all the documentation I need, ask all the right questions, and make sure I get any documents associated with that individual borrower situation all collected up front.
Yep.
The processor's job I'll give the file to the processor and I say, okay, it's ready for processing. So you'll go through the entire file and say, okay, I'm missing a pay stub, or I'm missing a bank statement, or these people are, I see a recurring $300 per month coming out of their account. Do they have child support, or whatever the case is, right? So their job is to go through with a fine tooth comb, make sure I have a complete file, and then they will send the file to underwriting. That one is pretty easy, right? So when a file has been sent to underwriting, which is after processing, that means the underwriter is going to go through all of the documents, the property, everything to underwrite the file for qualification. Yeah?
Yep.
Okay, so the file is out of underwriting and I have conditional loan approval.
Oh, CLA.
Conditional loan approval is a little bit different than the CLA reference on our purchase contract in Hawaii. So our CLA on the purchase contract states that the appraisal is in and it's been received and it's been reviewed by an underwriter.
Okay.
The CLA in my world, conditional loan approval, means that the underwriters reviewed everything that they have, and most likely they do not have the appraisal yet.
Okay.
Those take a while in Hawaii. But they'll go through everything and say, okay, based on what you've provided to me so far, your loan has been conditionally approved, and here are your conditions.
Yeah.
Part of that condition list will be an appraisal for them to review, most times. So they'll go through and say, here are your conditions, and then as a loan officer, I'll say, okay, borrower, here's all your conditions that I need you to go get. And then once I have all the conditions back and the appraisal, hopefully, I have insurance, I have any missing bank statements, pay stubs, anything like that, I send it back to underwriting. They review it and they say, great, you have everything I asked for the first time around. Here's your final loan approval.
FLA.
FLA. FLA is another term we use all the time, or CTC.
CTC.
Which is?
Can't tell crap. I don't know. What is CTC?
Clear to
Oh,
close.
clear to close. Clear to
You
close.
knew that.
I knew that.
You knew that one. Clear to close. So you got CLA, FLA, CTC.
Yep.
CTC and FLA are the same thing. You're clear to close, you're final approved, you're ready to go to the next milestone, which is
Closing. No, signing.
signing.
Signing. We have to sign first before we close.
So then we have to go and ask for docs. So it gets in line into the closing queue, and we're in line for docs. So you've got CLA, FLA, docs out. Docs out means that the doc drawer has gone in there, signed everything off, issued your documents. You can schedule signing. Reach out to escrow, reach out to your borrower, your buyer, and let them know that we need to go to the signing table.
Right.
After docs out, they sign, and then escrow scans them back
Right.
for the funder to review. So we have docs back.
Right.
Docs out, docs back.
Yep.
As a borrower, after you've signed, escrow will usually scan those docs back and the funder will review them. Make sure there's no missing signatures, make sure we've satisfied any prior to funding conditions that we have, and then you'll have funding. Funding. Linda,
Funding.
does that mean we close?
Not yet.
Not yet. How long does it take to close in Hawaii?
The money has to sit and cook for 2 days.
Business
2 business days.
days.
Yep, 2 business days.
Yeah. So there's wet funding states. A lot of the states in the U.S. will do signing, funding, and recording all happen at the
Keys, yeah.
table. You sign and then you get the keys. In Hawaii, we are on island time all the way around for everything. So we have signing. Funding usually occurs a day or 2 business days after signing, and that means everyone's got to put all their funds into escrow. The borrower needs to bring in the remaining funds for the down payment and closing costs. The lender has to send their wire to escrow. Escrow has to hold those funds for 2 business days. After they hold it for 2 business days, then you can record or close, same thing, and get your keys.
Yeah. And the reason for that 2 days, it's called the Good Funds Act. Again, it's fun. And it can be really confusing for people that don't get it, because people moving here from the mainland, I was one of them. You're not at a table and you don't get your keys. It has to wait. I call it has to cook, but whatever. It has to happen.
They just like to hold the money for a long time.
Yeah. Make sure it's all cleared and good and seasoned.